In 23, Sean, we had you on back in February, it was in 23, when we were much younger. You said Bitcoin was going to 44K. People didn't believe you. It happened at the end of the year. And then the following year, he said we were going to 115. We almost got there. But why don't we kick off there what you see happening for Bitcoin in 25?
I do think that Bitcoin gets to 175 this year. And
welcome in, everybody, to one of our most important shows of the year, every year, as we welcome on back on Coinage, the analyst that has been most correct in terms of everything that we've ever highlighted on this show. Very happy to have back on with us today, Sean Farrell, Fundstrat's head of digital asset strategy. Sean, good to see you, man. First show of the year.
hey, Zach, fired up. Thanks for having me. How are we doing?
It's a good day to do this. I mean, obviously, you know, this is one that we come back to throughout the year. We say, all right, what did Sean get right? What did Sean get wrong? And the list of things that you get wrong, very small. Want to give you your props to start because maybe people don't know you. Maybe people are just tuning into Coinage for the first time. If you're watching live, thank you for tuning in. Thank you for watching. In 23, Sean, we had you on back in February, it was in 23, when we were much younger, when we were just really getting started here. One of our first lives.
Look at that.
Look at that, man. Times were good. You said Bitcoin was going to 44K. People didn't believe you. It happened at the end of the year. And then the following year, he said we were going to 115. We almost got there. Basically got there. Off by a little bit at 108. But still incredible considering we were at 40 back then when you made that call. So excited to dig into your latest 2025 outlook, your report. If no one has, subscribed to everything you guys do at Fundstrat, definitely do that because it's where we get our alpha. But I want to kick things off, Sean, with just kind of your overall price target for where you see Bitcoin going in 2025, and then we can unpack why you see it and the other opportunities you see in crypto. But why don't we kick off there, what you see happening for Bitcoin in 25?
Yeah, look, the market this year definitely a little less straightforward. I think we have seen signs of that over the past month. Bitcoin, crypto, it is very sensitive to macro conditions, very sensitive to liquidity conditions. Obviously when liquidity is plentiful, when rates are rolling over, when we have soft landing-esque conditions, crypto thrives. It's the fastest horse in the race. When liquidity conditions are tightening, when financial conditions are tightening, it is the worst horse to own in the race. Over the past year, we've actually had a couple of instances of disconnecting from those macro variables. Back in Q1, we had the ETFs kind of take the reins, and there was a lot of speculative fervor around that. And, we were kind of able to shrug off some, not bad, but not explosive liquidity conditions. And then Q4, we had the election, and we kind of were able to look past, the dollar moving higher, yields moving higher, Fed balance sheet liquidity moving lower. But then fast forward to that Fed meeting, and the macros started to matter again. And since then, we've seen rate cuts get priced out, and we haven't seen the TGA get drawn on, which would be a boost to market liquidity. And, importantly, I think that, excuse me one sec. And so macro has mattered, and I think that we are at a point where the market is very concerned as well about trade policy. And you've seen clues in the market, like different articles getting released, and the market has really showed its hand that these tariffs and trade policy has really created a headwind for crypto. And so that was kind of like the framework and the thing, and the how we framed the risks heading into this year. And if you just understand that, it really ultimately presents a lot of opportunity in our view. Still a less straightforward year, probably, but we can talk through this. But I see, I view the trade concerns as being a sell the rumor buy the news type situation from a macro perspective. I think we do have a couple of catalysts that should provide some ample liquidity for the market going forward from both the monetary and fiscal perspective. And finally, I just think people are discounting the regulatory tailwinds once Trump takes office.
Yeah, no, I mean, there's definitely a lot to dig into in regards to, stablecoin policy. We had SEC Commissioner Hester Peirce on Coinage just a couple weeks ago, kind of highlighting all the day one changes that she sees coming, and we're getting very close to that happening. But I guess to put a number on it, Sean, as our viewers
Oh,
always
yep,
like to
of
know,
course.
uh, on this slide is kind of how we look at it. But you kind of, again, why I think we always put so much importance on your guys' calls is that it's data driven. It's not just like, hey, let me pluck some number out of the air. And this time you've arrived at 175. So I guess put a little bit more context on that number for what it looks like this
Yeah.
year.
Yeah, sorry, I didn't really get to your original question regarding price target. I do think that Bitcoin gets to 175 this year, and the way we're thinking about this is, I think flows are going to be solid, but probably not going to rival what we saw last year. And so this model is really just it models out inflows into the Bitcoin network based on a thing called realized cap, and then we apply a multiple to that, which kind of assesses how much speculative fervor is embedded in the market, and that gets us to our Bitcoin market cap. And this year, I think we see flows a little more subdued, not low, but just growing at a lower, a less fast pace.
Mhm.
But I do think that there's going to be, we'll call it a blow off top at some point this year. And there are a number of reasons for that, but we really haven't seen extended levels for this MVRV metric that we really like to use, but I think we move into that territory at some point in
Yeah,
2025.
we were just looking at that and kind of on our Monday show we do every week. Which again, if you're not subscribed to the channel, subscribe to Coinage because we have great guests like Sean on and discuss some of these metrics on a week by week basis. But that is interesting because I feel like this year is one where you can use the data approach, but as you say, in the next slide, throw out all of that if depending on what happens in 25 because as we could maybe shift into, no one knows what's happening in DC. We're about to see everything kind of take a complete, I think, binary switch flipping in terms of a very aggressive SEC. We heard from SEC Commissioner. I just want to play a little bit of what she told us because I think it sets up the context pretty well, Sean, in terms of throw out the playbook. There's a new sheriff in town. Here's what she told us just to kind of set the context, and then we'll get your take on the other side. Take a listen.
There's still going to be a time of uncertainty because it will take some time before our new chairman gets here. But there are, I think, some things that we can do right out of the gate, at least get processes started to make some changes.
So that's Hester Peirce talking about the SEC. But when it comes to Trump and President Trump, when he comes into office, it sounds like you're basically saying, look, there are a lot of things he can do day one as well.
Yeah, look, I think half of it is rhetoric, probably just the market obviously is forward looking, and so if you have Trump come into office and just kind of mention potential SBR, I think we could have a market reaction there. But from a actual getting things done perspective, I think we see some EOs day one. I think we see things like SAB 121 get rescinded day one, which I think would be massive. That would allow banks to come into the space and custody crypto assets, which certainly I don't know how much it's going to do for price in the immediate sense, but you're going to have a new cohort of market participants that is constructive on the space, and certainly that is a tailwind for crypto.
Yeah. So we talked.
And look,
so much
I think ultimately what is important to understand, I think people are discounting, right? The risks have kind of shifted here, right? Now the table has been set, and people are like, wondering how much is actually going to get done out of what was promised. But what's important to remember is how much impact, crypto had in the last election. They flipped a ton of seats, and there's another election in 2 years, and seeing the outsized power from a funding perspective that the crypto industry has, and looking at the slim margin that both Republicans have in both the House and Senate, I think there's going to be motivation on both the legislative and executive branch levels to get stuff done.
No, for sure. And I think, one of those things that everyone, I think to wrap up 24, and last time we had you on, you were saying that, look, if a strategic Bitcoin reserve gets approved, you're looking at 500K on Bitcoin. We've seen a number like that kind of thrown out from other people we've had on the show as well. But I guess when you look at the odds of that, you guys are assigning a less than 50% chance of it happening. I don't know if you're looking at anything in terms of maybe what you just discussed in terms of some of those smaller battles playing out in Congress to kind of get a sense of whether or not those odds change as we move throughout the year. But I guess that's the main thing to watch in terms of the 175 versus something higher.
Yeah, I will say I think regardless of whether it happens at some point next year, or this year rather, there will be speculation on the reserve, and in my view, that is that's enough to get a pretty significant rally. I do think that the probability is probably sub 50% this year. Just I don't know how much of a priority that it's going to be, especially from a congressional level, but even from an executive order perspective. But on the flip side of that, we have some game theory playing out on the state level, and so I do think we'll see a couple states get into the Bitcoin reserve game, which certainly not as explosive of a catalyst, but I think is worthy of consideration.
Yeah, there's definitely a lot to watch on the Bitcoin front, but increasingly not even what our audience is that excited about. And maybe this is a good thing to get into, is it's almost, I think, based on kind of where you're positioning the opportunities now too, is coming down a little bit on Bitcoin, looking more into a lot of the things that were hot to wrap up 24, which are AI agents, which you can get into, and continued excitement around Solana, and now Base. And so if you think about some of the opportunities with all that, I do want to shift a little bit to Ethereum. Your call on there, very disappointing year in terms of where Ethereum went in 24. Not a lot of people were stoked. Now with Base coming to the forefront, I'm very interested to see kind of your take on the disappointment in 24, because I don't think we hit the price target that you had projected for Ethereum. I don't think that was surprising, because a lot of people were underwhelmed by what happened on Ethereum in 24. But how do you maybe take that and apply it to 25?
No, look, I think that's why you subscribe to our services, so that throughout the year you can adjust your portfolio when we move underweight on ETH. But yeah, look, I think the risk reward here is still pretty tough if you're constructing a crypto native portfolio. I mean, we do think that we'll see some upside on a small cap recovery. If you look at, and I think we talked about this last time I was on, if you look at ETH's problems, it has a large market cap. It's had this messaging problem, fragmented ecosystem. So you mentioned Base. I think that's similarly part of the problem. If I'm a crypto native, I'm not getting along ETH. I'm probably getting along something on Base, which we can talk more about, and is something an area that we're very interested in. ETH is at a size where it's reliant on institutional capital as a marginal buyer, and so you really have to look for signs in traditional markets that would indicate that people are getting more constructive on, we'll call it, unprofitable tech. And if you look, since the ETFs launched, there's always been a broad relationship, but if you look, especially since the ETFs have launched, ETHBTC has tracked small cap tech relative to the S&P 500 fairly closely. And, I think if we're expecting some of, these macro risks to roll over, the dollar to roll over, some of these tariff concerns to dissipate, and we get that small cap recovery, that will present an intriguing, some intriguing upside there for a trade. And, we think we see, a regression to the 200-day moving average for ETH-BTC, which, presents some upside, certainly, very palatable upside for that institutional marginal buyer, but maybe, not as palatable for the crypto native buyer. And then I think the last thing to look out for in terms of catalysts, with the regulatory overhaul, we probably do have some movement on staking in ETFs, and that would be pretty massive for flows. I think allocators would be more likely to look at ETH, and importantly, I think it makes it provides positive carry on the basis trade, so we probably see additional incremental flows from that as well.
Yeah, that was definitely something that, it was a slow start to Ethereum in terms of the flows, definitely picked up at the end of the year. A lot of people speculating as to why, the trade you just mentioned kind of being at the forefront of some of that. But the other piece of it was just kind of the excitement around the AI angle and what we just had Jesse from Base and Coinbase on the show to kind of discuss what they have planned for this year, and increasingly very attentive to what's going on in the AI space. I'm going to play AI bear, though, with you, Sean, because I know that you added virtuals to the core strategy portfolio over there. And, with what just played out with AICC, the token drop for kind of the Accelerate DAO in some of the backlash for the guy behind AI16Z. Maybe we're going too deep into the sauce for some of the people who are tuning in for the first time today, but I think it's worthwhile because, the hype and the idea is that there are so many agents. Now we have frameworks where anyone can kind of spin these things up. What do they want to do? How do they generate money? And AI agents need crypto because they can't open a bank account. What do you see as maybe the right way to kind of, assess the space? I tend to be in the camp that, look, this is very early. Some of this stuff might actually not even be AI beyond just kind of an LLM like ChatGPT wrapper around some of this stuff. And maybe I'm not smart enough to project it correctly. But what are you seeing as like how that narrative shapes up this year, and what has you most excited?
Yeah, I mean, look, first things first, I think I'm with you on just about everything you said. A lot of it is really vaporous hype at the end of the day, and but that's how all of these crypto narratives work, and how these cycles work is that you have a bunch of different projects spin up, and perhaps 80% of it is nothing, but once the cycle is over and the scams get washed out, you have a couple of marquee projects that stick around and actually deliver tangible value. We saw that with DeFi, and I think we're going to see with AI. And the big thing for me is that I think these agents have the potential to really improve the UX in crypto. I think if you look at a lot of the onboarding problems, or not problems, just some of the tensions around wallet management and using cross-chain, multi-chain services. I think if you could actually set up an agent in a trusted environment, and you can have him manage your transactions and funds with a very seamless UX, I think that would go a long way in bringing DeFi products to a whole new cohort of users. So that's what I'm specifically very interested in. But from a portfolio positioning perspective, I think it's important to have some kind of exposure to AI. I think it's still the super it's a hot theme in traditional markets, and given what I just said about the intersection with crypto and AI, I think it's it's going to remain front and center as a narrative in crypto, and it has been its whole cycle, really, if you think about it. It started with some of like the GPU networks, Tau, at the start of this bull market, and has just really evolved. And I think right now, there's no agents in particular that we feel super comfortable with, or are at a in a position from a liquidity and market cap perspective that we can even really recommend to clients. But I think we like owning the pick. Given those considerations, we like owning the picks and shovels. We like having exposure to ecosystems on both Solana and Base.
I wanted to dig a little bit into that too, because I think, we saw, as I mentioned, the founder of AI16Z kind of came out. I think we have a lot of older viewers on the show today, so maybe I'll just say he had a tweet where he was like, F your face, to a wide piece of the crypto community, and we saw the token sell off a little bit. I don't know how correlated these things are, but AI16Z, one of those kind of, projects that is the example that a lot of people point to, and I think, Sean, correct me if I'm wrong, but it launched in tandem with Virtual's protocol kind of being the platform where a lot of these AI agents and tokens attached to those AI agents launch. And again, I think these charts show the hype around them. But to go back to kind of your slides here, is the strategy to just kind of buy those and play the picks and shovels thing. So why don't we just talk about how similar that is to the way that you kind of advise people to play meme coins, which is the same thing. Is people are making bets on these things. You own the casino. You own kind of the way that people are swapping in and out because those accumulate fees, and we've seen the growth of that on Solana. Same kind of context?
Yeah, very similar, very similar. I mean, Virtuals is a little different because it's a little more evolved in terms of the platform. I think their framework is less robust, but in terms of the protocol revenue, they're still printing considerable revenue, and a lot of that is being accrued by the Virtuals token. AI16Z is a little less far along in terms of its value accrual mechanism. Doesn't have a launch pad, but that's in the roadmap. And so I think and just from like a narrative perspective, Virtuals and AI16Z, if you think to yourself, hey, the agentic ecosystem is rallying, what are the charts are pulling up? It's probably Virtuals and AI16Z. ELIZA, super popular framework, as you can see by the GitHub star history. I think that I like owning both of these this cycle, unless something changes. Obviously, there is some founder risk there with AI16Z, but I think that's just a function of having a technical guy as a business leader. Sometimes they ruffle feathers.
For sure. One of the things, I guess, is we talked about this year, and Solana is one of our finalists in Crypto Project of the Year. You actually, I think, were part of the reason why we got Helium on, which is another project that you enjoy in the DeepIn space, which we talk a lot about DeepIn. If people want to see that, they can go back and watch our prior episodes or subscribe to the YouTube channel. But when it comes to, I guess, the pendulum swinging back, I think I'm going to read into our community nominating Solana as a crypto project of the year to still say that community is large. Still wild to think, though, Sean, how much XRP and Ripple has rallied, even though I have no idea what's going on in that community because they've never once kind of contacted us. If you're listening and you're in the Ripple community, go ahead and buy an NFT because we haven't heard anything from you guys. But in Solana, it's almost as if there's so many DeepIn projects. Now there's this hype around the ETF getting potentially approved in 2025. How much of that piece in adding liquidity? We just had Pantera Capital on the show again, also reiterating that, look, a Solana getting approved would not be the same thing that happened with the ETH ETF and the weakness there, because a lot of institutional investors actually do appreciate what's happening on Solana and want to be allocated. So do you see it the same way?
Yeah, I do. I think Solana is kind of a no-brainer trade right now. From my perspective, I think first and foremost, there is probably a cohort of buyers that is kind of sidelined right now and waiting to see how these unlocks go. We have these big unlocks coming in Q1, so you might have a bit of a buyer strike, to some degree, or at least relative to some other L1s or Bitcoin leading into that. But look, I think that unlock's mostly priced in, and I think that it is it's mostly hedged, right, from the dynamics around the FTX estate sale. And so you take what I would consider to be a likely bullish unlock, couple that with the potential for an ETF at some point this year. I don't have a good view on when that will actually transpire, probably sometime beyond Q1 if I had to guess. That is a pretty constructive setup for Solana. And if you look at just from a fundamental perspective, it's clearly pulled away in terms of on-chain usage this cycle, and it's tough to really contend with that fact.
Yeah, I mean, there's not a lot, I don't think, and again, correct me if I'm wrong, but looking at your guys' kind of strategic portfolio, it seems like there's no kind of blockchain that demands as much inclusion as Solana, maybe a little bit more in terms of kind of what's happening with AI agents on Base. But I mean,
sure,
whether it's Helium, whether it's kind of, everything you talk about in terms of Jupiter and kind of the swaps on Solana, it seems like it's increasingly taking up a larger and larger piece of your guys' kind of attention and portfolio.
Yeah, 100%. I think, and that's what kind of makes the risk reward here for ETH kind of tough, right? Because I just think there's more upside for Solana, and it's starting to get integrated with TradFi, I do think I didn't even mention it, but we probably get CME futures at some point this year. And I forget if I mentioned this, but there's no, like there was with Bitcoin and ETH, there's no substantial overhang. I mean, there is a grayscale Solana ETF, but I don't think the AUM is all that or is as substantial. And importantly, I don't think it's been trading at a premium for a while, and so you're not going to get that same arb trade leading into launch.
If there is one thing, though, too, in terms of kind of looking at the opportunities as you assess them for 2025, there is one thing that we talked about in 2024, the other finalist in our Crypto Project of the Year celebration. So if anyone has a Coinage NFT, as I know you do, Sean, they can vote in this. And also, we have some news pertaining to dividends being distributed to NFT holders to come. Big news coming from Coinage over here. But The other one in that, it's Solana and it's Stacks. And Stacks is the other one that we talked about a lot in 24 just because of the size of the prize in terms of Bitcoin TAM and the hope of people using their Bitcoin on chain rather than just holding it in cold storage or what have you. Was a big thing. Maybe didn't pan out so much. Stacks under pressure. I think it's retreated by about like 30% over the last couple months. Not in there. Not in your portfolio anymore. Do you think that opportunity has waned? How should we look at maybe Bitcoin layer 2s? Because if you listen to them, they're hot right now. So I'm trying to square that one.
Yeah, I guess that is a tough circle to square, Zach. But I think we haven't forgot about Bitcoin L2s. I do think they might be worth revisiting at some point this year. We had both Stacks and Core Chain in there at some point this year. There are a couple of things to consider. One, you just kind of gotta pick your horses at some point if you're constructing a portfolio. The other is, throughout last year, there was obviously the L2 narrative, but we were also kind of relying on Stacks and Core to provide, beta exposure to Bitcoin. And at some points it did, other times it did not. Normally we'd be, expecting to see, Stacks to outperform to the upside, but it didn't really provide that, or at least not to the extent we were expecting. And the other thing to consider is that we're going to have a lot of L2s launching this year, and there are two ways to look at that. One, it could just spark the narrative and we have a re-rating higher, and you do see a lot of Bitcoin get moved on chain and you see people start to speculate, and at that point maybe we do revisit Stacks and Core Chain. But another way to look at it is that you have a wider dispersion of liquidity, and you have people chasing the hot new L2 as opposed to Stacks, which has been around for a while and look, is doing all the right things, is executing. Manib and company have been crushing it, and I think long term certainly still like the project. I think just right now it's there's just more risk than there was last year in my view.
Yeah, and I guess, just to piece everything together, and again, if anyone wants to dive deeper on that, we both had Munib on the show and one of the initial builders at Core on the show, so all that at coinage.media. But Sean, in terms of when you piece all these things together and look at 2025 writ large for crypto, in what has been, I think, again, as we said, a flipping of the switch in terms of builders now having a sigh of relief, the SEC turning friendly, President Trump wanted to make the U.S. kind of crypto capital of the world. When you piece everything together, the other piece that we haven't talked about is stablecoins. And maybe, I joke, but maybe that's why Ripple's up so much since President Trump was elected, because they're launching their own. They're kind of the project most attached to the banking system, I think it's fair to say. And we haven't talked about stablecoins, and it seems like everyone and their mom would be tripping over each other to launch their own because that's where the money's at if you look at Tether. And so you have a slide in there, but how should people be thinking about that opportunity? Because a lot of times they don't make money directly. It's the companies themselves running these projects and chains that will make money. So how does that flow into maybe all the other coins attached to it?
Yeah, I mean, look, these slides on stablecoins, I felt compelled just to include to demonstrate how the crazy product market fit that we've seen with stablecoins and just the growth that we've seen. I think right now, I mean, obviously there are things like Athena that you can look to as a play on stablecoins and stablecoins integrating with traditional finance. I think beyond that, it's going to be fintechs, integrating stablecoins into their operations. That I think that's where a lot of the value accrual is going to happen. From a token perspective, from like a crypto token portfolio perspective, I think it's tough to position around that. But I think it's worthy to consider just how much traction stablecoins have gotten, and I think we'll continue to get. We put a little prediction in there. I think this year we eclipse 300 billion in stablecoin market cap in aggregate.
Yeah, it's important because that's liquidity flowing into the crypto space, and that's kind of what you want to see in terms of rising tide lifts all boats. So I understand the connection there. But outside of it, Sean, I mean, we talked a lot already in terms of big picture things. The other thing that maybe I could push back on in terms of risk reward might be, look, it's kind of like waning moments of the bull cycle, right? Some people might say, look, we're already up a lot. Yes, you have Trump coming into office, but you also got the macro things that you and I have already discussed multiple times to worry about in terms of the business cycle, kind of getting into that territory where, hey, look, the good times must come to an end at some point in these cycles, not just for crypto cycles, but also for macro cycles. And so when you weigh all those things, some people might say the risk in terms of eventually ending lower this year could be larger than the reward in the waning quarter of this cycle. So how do you kind of put all those things together? Because I know you have a slide still in terms of where we're at in the cycle and how much room is to run. How do you put all those things together?
Yeah, I mean, like, look, if you've been, I know to us, it seems like this bull market has been going on for a while, but we're just getting a new cohort of investors and market participants into crypto right now, and they haven't been here since the bottom. And I think it's important to remember they're entering with a much higher cost basis, and important to remember that towards the end of cycles is where you often get some of the biggest, most nonsensical moves, and often that blow off top is what puts an end to or signals the end of the cycle. I think it's with all the structural tailwinds, regulatory and otherwise, it's good to just stay long in this space until signals that things are turning start to arise. Like we perhaps started to see in December, but have since kind of worked through those, so to speak. And if we I don't know, from a risk reward perspective, I mean, how many macro assets are putting in 80% returns? I mean, going from to me, if we get up to 175, I mean, we're talking about where are we at right now?
We're at around 98-ish, something like that.
All right. So like we're talking about a 75, almost 75% return there. So I mean, I think there's ample risk reward right here.
Yeah, I was thinking about it too. I mean, I was just looking at the gold returns over the last year versus Bitcoin. Bitcoin 4x, I think, in terms of kind of where gold was for the year returns. So yes, it's still kind of like one of those things where, look, what do you want to allocate to? And I think that that's kind of what we talk about here on Coinage, because as large as that is, if you're a traditional investor, very, very high. If you're coming from degen territory, it might seem low. So blow off tops matter, and I think there might be a piece of this that you mentioned in your kind of review of the year as well, in terms of Q1, what to pay attention to, because it seems like there's a lot of projects that have been waiting in the wings, and we have some insight into this at Coinage because we run our own validator arm as well, which anyone in the Coinage community can stake with us, and we're seeing these projects prepare to launch. And so I wonder what that might do to some of this too, because it could be blow off top FOMO in terms of people saying, I wish I got into that project, which we're kind of already seeing in the AI space. Or it could just kind of be a negative for the space because so much liquidity is being zapped from other projects that already exist. So how do you see that shaping up, particularly in Q1, and how do you see it changing throughout the year?
Yeah, well, I mean, like you said, there are a couple of ways to look at that. I think that It all depends on flows into the space, right? I think if you have inflows, and that's something that we really stress and put a lot of emphasis on, right? USD inflows via ETFs or via stablecoins. If you have that, continuing at a consistent pace, that should ultimately result in a pretty significant wealth effect for, from projects launching. We'll probably have some airdrops as well, which should also contribute to a pretty substantial wealth effect, and you probably see some of that capital migrate into either back into Bitcoin, Solana, other tokens, and I would view it. I guess it depends on the macro, but certainly if the macro is right, I think it's a tailwind.
I didn't see okay, I see it now on this slide here. But I guess there are a lot of calls that you make in this full report. And by the way, if you're watching this and you don't yet, go ahead and go subscribe to Fundstrat's research, because as I've said off the top, Sean, some of the best that we find in the crypto space. But in terms of the Solana price target here above $500 potentially this year, and the ETH price call, and the Bitcoin price call, and everything else that you have in this report, what are you most confident about when it comes to this? What's Sean Farrell's most conviction play in 2025? Because I almost feel like that's what matters more as I do this longer, is not just kind of like, hey, place your bets. It's really lean into the ones that you like, double down, triple down as you have on your conviction calls every time we have you on. So what are you feeling most confident about?
Yeah, I guess we'll toss. I'm obviously very confident about Bitcoin. I think it'll do well. Yeah, I think if it's not obvious already, Solana is probably my highest conviction bet. And it sounds lame, but I like meme coins. I think they'll do well. They're good to trade. I think there's pretty dependable buyers there if animal spirits return. Because some of these assets you just don't know if they're going to have that spark, have that if buyers are going to be there. Meme coins will. I also still like owning what we titled the casino stack back in October. That is that includes Solana, but it also includes Jito and Radium, which certainly benefit from increased on-chain activity on Solana. And that's not to say all on-chain activity has just been due to meme coins. There's a lot of other very good stuff happening on Solana. Like DePIN, stable coins, etc. But I think those are pretty good to own here. But yeah, I guess if I'm ranking my highest conviction bets, that's probably it.
Well, not surprising then, I suppose, to have Solana be potentially our crypto project of the year as they ride that momentum from 24 into 25. Anatoly also, having come on the show before, we've heard from them and builders in the space. That momentum doesn't seem to be waning and really coalescing around a unified vision. So it has been exciting to see play out. As always, Sean, I thank you for coming on, because, we always look back on these to start the year and say, wow, we covered a lot that actually wound up happening, which I think, is the goal around here, to try and give some insights back to our community. And can't thank you enough for coming on, man. Always. Thank you.
Yeah, Zach, always a pleasure to come on. Thank you for having me. Hopefully we can look back. Hopefully we don't look as young now relative to our future. But
it's wisdom we gain. It's wisdom we gain. It's the maturity. It's the lessons that the crypto market teaches us. It's a lot to take in. But I do appreciate the duality of man.
One day here is 7 years on Earth, right?
That's right, man. We've seen some big drop-offs in this space. But no, I give you credit. They say the duality of man when they look at your portfolio and say Sean Farrell appreciates macro and bonk. There are not a lot of people who do. Right. But you do, my friend, and I appreciate it. For Sean, for myself, that's going to do it. If you're watching this for the first time, appreciate you tuning in. You can head to coinage.media to catch all the big headlines in crypto. Our thanks to Sean Farrell and the rest of the Fundstrat team. If you haven't yet, go check out their research, become a subscriber. And if you want to join and co-own Coinage as the fastest growing Web3 outlet here in the US that is a DAO, go ahead and head to Coinage.media to mint today as well. That's going to do it. Thanks for tuning in. Go subscribe, go like, retweet if you want. I'm Zach Guzman signing off from our Coinage studios in Brooklyn, New York. We'll see you again soon.